Morning, fellas. It's about 11:36 here in New York, and today, thanks to the retweets that you guys gave us, I'm going to give you an update. And we decided, given that price hasn't moved that much since both Sam and I provided an update, that I would just do the video for Monday. So, in this video, I'm going to cover both bull and bear cases, since Sam won't be doing his bull scenario. And of course, I typically cover the bear case, but I'll try to do both here. But being as objective as I can be, I must say it's very much looking like the bear case is in play. So this is the bear case I left you guys with last. I had it as one of two possibilities. If you think that there's a triangle in here, one possibility was this one, where you've got a W that's a zigzag, very clean count, and then an X that itself is a combo. As I said last week, and I've said many times, you can have a combo within a combo only in the X wave position, never in the actionary wave position, meaning the W, Y, or Z. Therefore, this qualifies as a zigzag W, zigzag X, and a triangle Y to complete the X. Okay, then the Y would have to be simple, and very likely, given the light retracement of this W by this proposed X, it would be a zigzag. Otherwise, it violates the strong guideline that X waves retrace 90% of the previous actionary wave, in this case the W, and if the X ends as a triangle, it wouldn't even do 236. It would be very light retracement. So that's kind of where we left it. I talked about why I like this count. We measured the actionary waves, the A and the C, being related somewhere between 50 and the 618. You can't see the markings as clearly here, but you can just watch last week's video if you want all the detail. You can see it here. And then the reactionary waves, the B and the possible D here, would be related also by 50 to 618. Now, it did hit the 50 to the tick here since I last did the video. You can see here, it wicked down here to hit the 50 right here. Okay, so whether this D is complete or in progress remains to be seen. I have a bias that it's still in progress, where all of this is the A, B, C, B, and then we're coming down for the C somewhere along this trend line. Even below it is acceptable so long as it doesn't break the endpoint of the B here at 58.94. So all the way down to up to 58.94 and 22 cents would be valid, or even 21 cents. If it double bottoms, it would be called a barrier triangle, and it would force the triangle to break downwards. I think that's what's going on here. We might hit that, so just to recount it like this, I think this might be the D coming down. It wouldn't surprise me if it nailed the 2618 on time, because look at how good this fib time pull from the proposed A has been. The 618 nails the B. The 1618 nails the C. The 2236 so far has nailed the peak of this move. So it's been a really good guide. And maybe the 2618 would be where the D comes in, and then you've got a short three-wave move up here for the E. And boom, and then it's downwards, right? So I think that's one possibility. The other possibility is that the D is in. This is A, B, and then a short D. So here, and now we're putting in the A, we're putting in the B of the E, and then up for the E. It's very hard to tell right now, because from a measurement standpoint, it does qualify, having hit the 50. We're not getting a huge clues from fib time as to which one it is. It could be either. I think you got to just keep your eye out for both possibilities. But right now, from a right look perspective, it looks better to me that this is A, B, C, some kind of flat B to this D leg, and then a five-wave move down to put the D in right around this trend line, likely close to the 2618. That's what I feel is most likely. But again, if it moves up, then keep your eye out for the E coming in potentially. The other case that I had a triangle in was the bull case, which had the entire correction as a W, X, Y with a Y triangle. Now, before I go on to this one, someone in the comments mentioned that a Y triangle is unlikely. I don't know which school of Elliott Wave that person adheres to, but let me tell you without reservation that is a false statement. First of all, the triangle is a very common corrective structure. There's three basic corrections in Elliott Wave. There's a zigzag, which is the most common, and then there's flats and triangles, which are flats a little more common, but triangles not far behind. And in WXY corrective sequences, the W and the Y must be if you're talking about a double 3 sideways combination, must be simple patterns. They can only be a zigzag or a flat or a triangle. So for a Y, you've only got 3 choices: a zigzag, a flat, and a triangle. And if the W is a zigzag, it's very unlikely for a sideways pattern. In fact, it's not likely at all that the Y would also be a zigzag. It would much more likely be a flat or a triangle, which leaves you with a roughly 50% probability of a Y triangle in WXY sideways pattern. So where this person made that comment from, no offense, but it's just false information. It is very possible that there's a triangle in the Y position to end the entire correction, or in the Y position of an X wave, as I have it here in the bear case. Nevertheless, this is still a credible count. Like I said before, I didn't like it because the A wave was so long in time that so far, B, C, D, and E would come in and still not be enough to fulfill the time of the A. But triangles are allowed one complex wave, and complexity can be defined as pattern complexity, meaning a double or triple zigzag or a triangle. Those are the 3 options for complex waves within a triangle, or length of time. And this is clearly a very long wave, and so this plays. Now, the reason why I don't think this is likely, aside from this A being such a monster A, is if you look at the entire price record, which I have here, ignore the fib time here. This is just me trying to play around to find confluence, and you can see that there's some here, and a lot here. But just ignore that for a second. These are the 3 major corrections that Bitcoin's gone through since inception. Inception, as defined by the Genesis block, is here, January 2009. As defined by the first commercial transaction, that's May 22nd, with a bunch of, I think a guy bought some pizza with Bitcoin. And so this is really the one that's of relevance to a price chart. But if you wanted to pick this as the origin, I wouldn't begrudge you. Point being, there's been 3 major corrections. This one, and the one we're on. And whether you have this as a count as a 1, 2, 3, 4, and then a 5, first cycle complete, now we're going down cycle level 2. Or if you have this as a 1, 2, all of this the 3, and this is a 4, I don't care which one you have it, either way, this is just not long enough. First of all, if this is the 4 of the 3, and this is the 4 of a higher degree, not only is this shorter in time by a bunch, 275 bars versus 410, so a little over a year versus under a year, but it's also shorter in retracement, 70.35 versus 86.13. And as I've said many times, usually there's a relationship in which when you have fractal patterns, which this certainly looks to be fractal to this, not exactly, but having similar shape, or at least of the same degree, or even a higher degree, that something, a correction that is longer in time tends to be shorter in price and vice versa. Well, this is both shorter in time and price, right? This is what I'm talking about, which is why I believe these 2 are the same degree, is this one is much, well, this is pretty deep, so using the word much is a little inaccurate, but this is noticeably sharper in price, 94% retracement versus 86, and shorter in time, 158 bars versus 410. This is what you would expect out of a 2 and a 4, something like this. So if this is the 2 and this is the 4, maybe that plays. But what doesn't play is that this is a 4 of a higher degree than this 4, which I guess it would have to be a 4. 1, 2, 3, 4, 5 would be the way you would count this as a 3, I would think. And if that's the way you count it, well, how can the 4 of a smaller degree be this much more substantial than the 4 of a higher degree? It doesn't work for me, and it shouldn't for you. Also, the Elliott Wave, the Vegas Wave crossover here on a very similar pattern tells you we're not really that close to done. So for all those reasons, I strongly favor this count as opposed to this bull count. But we can't ignore it. It is certainly in play and something to look out for. I want to give you one other piece of analysis that's very basic that suggests very strongly that we're headed for one more move down, and that's looking for divergence. Here I've got it on the daily, and you can see on the daily, which I've argued is the most important time frame, that there is undeniable hidden bearish divergence. Hidden bearish divergence occurs when price highs put in lower highs, so lower high, lower high, and the oscillator puts in higher highs, higher high, higher high. Let me zoom in here. You can see it very clearly. Higher high, right? This is what you call hidden bearish divergence, which is a very strong continuation signal, which suggests a new low to be put in from this bottom, from which the divergence originated. From this swing low, this swing high began the divergence, right? So we would expect a low relative to this swing low. And we got it here, but it was really more of a double bottom than a true low. And then the divergence continued thereafter for one more pivot. It's a multi-pivot hidden bearish divergence, a very strong signal. To me, that indicates one more leg down for the entire correction. First leg, second leg in progress, third leg. So now that we've got that out of the way, let's focus a little bit on the title of this video. Key analysis tool for trade devils is the Pitchfork, and I wanted to show you a pattern that I noticed a few videos ago that's continuing. So here I have the 3-hour chart of Bitcoin. I've noted these trend lines here. Nothing to do with Elliott Wave, it's just simple geometry. Is, you know, when you connect these two last swing highs to these last two swing lows, what happens at the intersection of price in either of these two trend lines is notable. Now this red line here is the limit at which point the triangle becomes invalidated. If this is an A, B, C, D, E, well, the D can't go below this level. So if it's a D in progress, where it's just an A, B, and a C down here for the D, then we're expecting it not to go below here. Now, I did talk about the possibility that this was A, B, C with a new low here now. This is a credible D, a little short of a C here, but nevertheless A, B, C, D. And we're going up A, B, down, C, up to put the E in. That's possible. So if that happens and you hit this trend line or anything below this level, and then it starts pumping downwards in good volume, well, there's your confirmation that the triangle just broke. I would expect it to go way below this level, right? So just some trend lines to keep an eye on. But back to this Pitchfork concept. As I noted in a prior video, I forget how many videos ago, but a bunch of videos ago, the Pitchfork from swing high to swing low to swing high has not worked at all for this entire correction. It just has not been an accurate indicator of anything. As you can see, like, there's no hope of the median line being hit. It's just geometrically insignificant to this correction. But what I noticed was that if you go from swing high to two swing lows further, so not this one, whoops, we got the wrong tool. So from this swing high to two swing lows, so not this one but this one, and then the next swing high, that it's been very, very good. Right? You can see the median line being hit here, and it bounces up. So let's continue that. So now you go to the next pivot here. Swing low, not to this swing high, but to this swing high, two swing highs later, and then back to the swing low. You get a median line hit to the tick. Bam! It goes down. So let's continue. One more. This one. So I'm going from this pivot to this pivot to this pivot. This is a Pitchfork Pingpong here. Third swing high. Sorry, third pivot. Swing high. We did this one. We did the swing low. We got a perfect response both times, right? We got, where's this? Yeah, we got this response to move it up. Then from this Pitchfork, we got this response to go it down. Now from here, you wouldn't go to this swing low. You go to the next one, here, to the corresponding swing high, which would be here. What do you get? A perfect hit on the Pitchfork median line yet again, and it goes up. 3 times in a row now. Is that coincidence? I don't know. It doesn't smell like coincidence to me. So let me erase these, or hide them, I should say, because now it's getting a little cluttered. But we've done this one, this one, this one. And so now we need to do this one. This one's tricky because we don't know where the pivots are in. But we wouldn't go from this swing high. We'd go to the next one here to the swing low. Well, the swing low would be here. Here. If this is a D, A, B, C, it's in. And you can see we haven't quite hit the median line. But as sure as the sky is blue, it looks to me like if this is an A and a B and it goes up for the C, well, it might go right where this trend line intersects with the median line of this pitchfork and put the E in. Or if it doesn't, and it's just the A, the B of the D, then it will go down for the C. But this is a level where if you think history repeats itself, you better pay some attention to this level. Because every single time that this pitchfork for 2 pivots forward has been measured, it's nailed the end of that move. Again, just to do it again, let's do it backwards now to emphasize the point that this is a key level to watch. But let me make this gold just so you know that this is the one that's in place still that hasn't been resolved. And then let me use green for the other ones. One pivot back to this one will be this one. Not this swing low, but the next swing low to the swing high. Let me change the color. Bam, right there. Precision strike on the median line to change the direction of the move, right? So we've done this pivot, we go to this pivot, now we go to this pivot, swing low. Not to this swing high, but the next swing high, down to the corresponding swing low. Precision strike once again on the median line to reverse the direction of this move down. And then finally, this last swing high, which is the swing high corresponding to the beginning of this sideways fuckery. Not this swing low, but this one. And all the way up to this corresponding swing high. Bam, median line hit right here. 1 tap, 2 taps, boom. Strike to reverse the direction of the price upwards. So, pitchfork ping pong, fellas, whether you believe that this is coincidence or not, this is a very key level, even as an isolated pitchfork to consider, because chances are very likely that you're going to hit this median line and potentially go back and forth a little bit and then reverse direction. And if that happens, well, we have the possibility that this bear case is in play. And if that happens, it would resolve a lot of questions around what's going on here, which has confused analysts for many months now. And it would put some finality to where we are in the correction, which is not close to over, and beginning the 3rd leg. So some important clues are about to come into the market in the next week or two. And tune in to see my latest thoughts and Sam's latest thoughts and where we are with price. The last thing I wanted to leave you with was a little bit of my own experience. I actually was pretty active in a stock that was issued as a chart challenge for our members a while back. We have since stopped doing them for a little bit as we rolled out our belt system, but we're going to resume them very shortly when we free up some capacity from our Sensei team. But basically we have a very difficult chart to chart once a week where there's a key lesson involved in Elliott Wave. And I issued this chart challenge because I was stuck with following the stock for some time and trying to figure out what the hell was going on. And ultimately, I resolved it with the help of triangles. And that experience, to me, is very fresh in my mind and looks almost exactly like what's going on with Bitcoin. So here is the chart for Bitcoin that we've been playing with. And you can see the bearish divergence, the hidden bearish divergence that we talked about, right? And as I said, as a result of that, I'm expecting a leg down. Well, take a look at this. LKM. Very, very similar pattern. Here and here. You can see the similarities, right? A, B, C. A, B, C. And then sideways fuckery. Big pump up, sideways fuckery. A, B, C. Big pump up, sideways fuckery. And if you guys want to know how this ended, this ABC pump up sideways fuckery. It didn't end with the sideways fuckery. It's still in progress, but it ended like this. Big, steep move down. Now, keep in mind, this is in log. Okay, so if you take it out of log, you can see that because price had retraced so much, by the way, in arithmetic, does this look familiar to anybody, this pattern? Because you can see it all over the place in many asset classes, not just crypto. But because the initial drop was such a steep drop, 70 some odd percent, which, by the way, if it was 70 some odd percent, does that sound familiar, that number? And there was sideways fuckery for many, many months and years even. 15, 16, 16, 17, 17, 18, 3-year sideways fuckery. And it finally broke down on declining volume. Very similar to what's going on with Bitcoin. And this is some kind of impulsive move down. Now, in the chart challenge, you guys, members will remember that I had this counted as a triangle, and this triangle had a triangle within it in the E leg. I think I had the E as an A, B, C with a B triangle in here. A, and then a triangle here, and an E, C. A, triangle here, C, to put the E of an A, B, C, D, E triangle where the E was the complex wave. And guess what? That is very similar to the way I'm seeing Bitcoin now. And obviously, given the steep drop, this couldn't be a one-to-one relationship. Otherwise, it'd be in deep negative territory. But something like 382 would make a lot of sense. As an extension of this, off of this E here, the orthodox top of this correction, 382. And similarly with Bitcoin, first leg, some kind of triangular or triangle within a triangle, some kind of structure that contains a triangle, and then a leg down. Now look at this. I keep going to the wrong chart, sorry. Here. If you look at the RSI, you can spot the hidden bearish divergence. Whoops. Looks like I already had it in here. Throughout this portion of the correction, which corresponds to this portion of the correction. Undeniably, this is a higher high. This is a higher high at the oscillator level, but in price, you've got a lower high, lower high, lower high. Very similar to what's going on with Bitcoin right now. So I would expect maybe a little pump up here to put an E in, potentially with an overthrow, and then pain. Again, just because it happened in this stock doesn't mean it happens in Bitcoin, because the charts are similar, but it just lends credence to the count that, sorry, not sure what happened there, that when there's a lot of sideways fuckery, especially for a very protracted amount of time, it's pretty rare, in my opinion, that that's where the correction ends at. In fact, I don't think I've seen a correction of this shape just end here pretty much ever. There's always a third leg down. Doesn't mean that it can't be. Like I said, I gave you the bull case where there's a Y triangle in play, and then you moon upwards, but I've also given you overwhelming evidence to suggest that that's unlikely. So until next week, I'll talk to you guys soon.